the end of the day, I'd like to think we're all really nice guys. I'd like to think we're all very knowledgeable. But in a really simple way, we are nothing more than highly educated, money-making machines that are using our education, training, and experience to better other people's lives and to build a lifestyle for ourselves and our families and pay down debt. And if it all ended and we could not work because we were too sick or hurt, that's the problem that disability insurance may effectively solve.
Welcome to the Physician Sense Podcast, a podcast designed specifically for physicians, offering a breakdown of complex financial topics to help you develop your financial IQ, further your financial journey, and improve your well-being. Whether you're a medical student, resident, fellow, or attending physician, you're sure to learn something new that will benefit your journey. And now, your hosts, Chad Chubb and Tyler Olson.
Welcome to another episode of the Physician Sense Podcast. I am Chad Chubb. I have my fabulous seasonal colored shirt co-host, Tyler Olson, with us. But the real star of the show today, we have the one, the only, Larry Keller with us. Larry has been a huge part of my learning about disability. And I'm going to give him a little bit of a shout out to get started. He doesn't know this is happening, neither does Tyler, but I used to sell disability insurance many years ago. And I thought to myself, I'm a pretty smart guy. I can do this. And then randomly, I sent an email to Larry Keller thinking like, he can't be that smart. Boy, did I learn a lot that day. And that was the day I went back and I said, I'm no longer selling insurance products, because while I didn't hurt anyone here, there was a level of detail that Larry Keller got to in his most basic form. I didn't even have to challenge him, and he got there. So Larry, thank you for joining us. I'm excited to get into this. Aside from the podcast, you're one of my good buddies. I'm really excited to jump into these topics with you because I know that you have a little bit of expertise in this area, my friend.
I love it. You know, anytime we can make doctors more well-informed and prevent them from doing things that they shouldn't be doing. You know, the clientele, like, they're struggling for time. They want to check things off their to-do list. I can't blame them, but a little bit of homework up front goes a tremendous way.
The craziest part to the start of this podcast for our listeners and viewers is that I have two rock stars on this screen who never officially talked in person besides this moment right now. So this is also having two world-class superstars in the physician space hanging out together. I'll be your narrator, but we have these two rock stars with you.
I love it. That works for me. For a moment, I was debating whether Tyler Olson actually existed or it was just like a social media, frenzy that I was seeing.
It's one of those Russian bot accounts. He's actually not a real person.
I am an AI rendition of someone else's figment of my own imagination.
I love that.
No, it's really cool. It's a good way to, it's like, Larry, our story is, our story together is long and, slow process, we'll get to know each other better and better. And I've appreciated, like everyone that I've spoken with who knows you in the field, they're like, he's the best. Other agents like Stephanie and Michael in particular, they're like, they speak so highly of you and your practice. And so I, especially in the realm of like, I know we're going to talk about a few things, but like GSIs, I'm very interested in hearing your perspective on that and how it relates to physicians, because it is a quagmire. Like even to me, it feels very complex. I can imagine that it's very, very overwhelming for a lot of doctors who are trying to see like, what am I supposed to do here?
Yeah. And a lot of times, that saying, if it sounds too good to be true, it probably is. For better or for worse, that's actually not the case. It can be the case. It's like a financial planning question. Like, what's the answer? I don't know. It depends. So we'll talk about like when it might be right. I don't necessarily think that it's ever wrong to the point that you can blanketly say it's wrong, but you have to just evaluate things and take into consideration your own individual needs and goals and philosophy and time frame and availability. And then I always tell people, whether it's a GSI plan or whether, it's buying insurance or financial planning, I can ask only so many questions. I am never going to know as much about the person that's looking in the mirror that they're going to know about themselves. So like financial advisors, a good insurance person will ask a couple of questions, take a step back, let the individual find themselves, and really just you're a resource to them so they can make an educated decision as if they had our education, training, and experience the same way they do in medicine. And if you do that and you educate rather than sell, you're dealing with people that are extremely intelligent, many of which make decisions very quickly. Unfortunately, if they're given half truths, they're not given information as to what's out there, no matter how smart you are, you're likely not going to make the best decision because you're doing it based on limited information that's presented to you.
We'll get right into the GSI, but even before we get into the GSI, because my biggest pet peeve, and I know Tyler's right there with me, Larry, is when someone had access to a GSI, but they can never get that GSI again because they were declined because their brother-in-law's cousin's brother sells insurance at this certain place and they just give them the application and they move on. I'm not even going to go down there. I always have this, I got to look out of my corner of my eye. I got to keep Tyler in line here. If we go too far down that rabbit hole with certain brands, we'll never get them back. So I'm not going to go there.
Yep.
But why don't you give us a high level overview of, okay, you're a resident, you're a fellow. These are some common declines. Like you're going to actually apply somewhere else and get declined. So if you have one of these, a GSI may be your once in a lifetime opportunity to get good disability. So almost let's start like pre-GSI and then we'll get into GSI. But what are like common things, common issues, medical conditions that you see that you'd say like, hey, in a lot of places, like this is a hard decline, not even a rating per se, but a true like decline.
This goes into one of those it depends situations because there certainly are hard declines. The problem is the way physicians look at medical conditions. I'll call this medical management. And the way insurance agents looks at things and insurance companies look at things, I'll call this probability underwriting. An almost instant decline, depending upon the extent of it and what it's for, I'm going to call self-prescribing or peer prescribing. So this is where you're writing a script for yourself, or if you're married to another physician or another medical professional that has the ability to write prescriptions, they might be writing that for their spouse. Are medical records available? No, because this is being done informally. It might be another resident that's prescribing for you, their co-resident. So the person has no idea that the insurance companies are going to do a prescription drug check when they apply for disability insurance. And it's going to show up. And we're going to find generally the physician's name, the prescription, physician's medical specialty that's prescribing, the number of refills. And they're like, but I never took this. I got it just because in case I had symptoms of this. And this was going on during COVID tremendously. And it makes sense due to the law of supply and demand. So if you're self-prescribing or if you're peer prescribing and no medical records exist, and it's something other than, let's say, like a Z-Pack, there's a good chance that you are going to be declined solely for self-prescribing with no accompanying medical records. So most physicians, this is never even going to enter their mind until they're declined. A good general rule with guaranteed standard issue plans is once you are declined, for the most part, you have now become ineligible for a guaranteed standard issue offer. Now, there are exceptions to that rule, but let's go with some of the other right off the bat declines that are medical that really couldn't be prevented. So recent diagnosis of sleep apnea. And it could be mild, but more likely it's going to be moderate or obstructive. A CPAP machine is prescribed. The insurance companies want to see that the person has been on the CPAP machine. They want to see that they're compliant, and they want to see that the symptoms are being resolved. This takes time. So if you apply and you had a recent diagnosis of sleep apnea, you're likely going to be declined if it's within the first 2 years of the diagnosis, give or take. Diabetes, let's say type 1 diabetes, you're on insulin, you were diagnosed when you were a child. That's an instant decline for individual disability insurance. If you have a cardiac history and you were told to do follow-up studies like a Holter monitor or something like that, and physicians are busy, and they're physicians, so they're like, it's not a big deal. I get a flutter here and there. I probably drank too much coffee. I've probably been too stressed out. I don't have the time to do it. Not following your physician's orders all the way through to rule out what you don't have to ultimately find out what you do have is likely going to end up in a decline. So just know, general rule, once you're declined, there might be no coming back and getting a guaranteed standard issue offer. Now, more often than not, it's not going to be a decline that gets somebody. It's going to be something that's very common. It's going to be exclusion riders, where we'll say something like, Tyler or Chad, we're happy to insure you, but we're not going to cover either certain conditions or certain body parts. So this could be, I was diagnosed with ADD, ADHD, either when I was a child or when I was an adult. That's going to lead to a mental nervous substance abuse disorder exclusion rider. I had a recent needle stick, and I don't have a negative HIV, hepatitis B, hepatitis C testing done that's 6 months past exposure. That's going to get me an exclusion rider for like bloodborne pathogens. I'm fatigued. I've seen a physician, but there's really no cause for my fatigue. So the insurance companies don't know what it is that I have. That could lead to a decline. It could lead to a rating, which is a terminology for a higher premium. It could lead to a limited benefit period. So instead of getting benefits to the age of 65 or longer, maybe you are only going to receive benefits for 2 years or 5 years. Build, either my BMI is too high, my BMI is too low. That can lead to a decline. That could also lead to a rating. That could lead to a limited benefit period. I see a chiropractor, but I'm a surgeon. I do it to make sure that I'm aligned. And this is all about being preventive, not having palpitations of my back and then going seeing a chiropractor. I'm doing it really prophylactically. Well, think about it. If you go to see a chiropractor, you can't walk in and say, I just want to come in because I want to have a massage. It's likely going to be billed through an insurance company. It's going to be coded as something. And now you're going to get an exclusion rider for, say, your lumbosacral spine. It's discs, muscles, ligaments, or nerve roots. Maybe you'll get some language that says with the exception of laceration or fracture. Pregnancy, complications of pregnancy, infertility. If I apply, I'm not going to be declined because I'm pregnant, but I'm going to get a pregnancy exclusion rider. And as much as we might tell people, look, before you apply for disability insurance or life insurance, get your stuff in line before you try getting pregnant. Oh, I really wasn't trying, but it happened. Well, okay, now if you go to buy it, you're going to get an exclusion rider for pregnancy or complications of pregnancy. But I don't want that. Well, at that point, you could potentially get a guaranteed standard issue plan that would cover pregnancy or complications. That's not going to be across the board. That's going to be with maybe one company. I participate in hazardous activities. I rock climb. I jump out of a perfectly good airplane. I scuba dive, but I go down to wrecks and salvage. And because I'm a physician, I'm protecting the A-list movie star when they're down there. I'm going to get exclusion riders for any of these conditions. So the first thing that goes through my mind is, if there is a GSI plan available, not why would I want it, why wouldn't I want to take advantage of it? Now, some people, and you've probably heard this, guys, a GSI plan is more expensive than a fully underwritten plan. Generally, that's not the case. It's the same policy that you will buy on a medically underwritten basis. Generally, in some cases, you might find like Standard Insurance Company, if there's a GSI plan at a hospital that they are sponsoring, that plan will have a discount. If you go fully underwritten, you don't get a discount because you didn't go through the GSI program. So there's always exceptions to the rule. But generally, it's going to be the same pricing with the same discounts, but on a guaranteed basis. And again, there's a statistic out there. So this was done in a study by one of the reinsurance companies. And they say 50%, half of all of the individual policies that are applied for on a disability insurance basis are either modified or declined. So 34% is modified and 16% is an outright decline. So we're looking at a 1 out of 2 chance. And unless you know your medical records are unremarkable, unless you know your prescription history doesn't exist and is unremarkable, it's almost like that movie, right? Do you feel lucky, punk? And, I don't know. I don't know what's in your medical records. I can ask. You guys ask financial planning questions. I'll ask health questions. And someone will come back to me, no problems. I take no medication. I have no health issues. They apply medically and their medical records say otherwise. You can't undo that generally, right? So I would say number one, first and foremost, is if there is a guaranteed standard issue plan, you need to find out if one is available to you at your institution. Now, believe it or not, if you go to graduate medical education or you go to the benefits department, in many cases, they will not even know if a GSI plan exists and is available to you, right? So I've had people, they come to me and they're like, Larry, I know I'd like to buy a guaranteed standard issue plan. I called graduate medical education. They tell me nothing is available. And I come back right away and I say, well, you're in luck. There is something available. Well, how come they don't know about that? I don't know. I can tell you that there's 2 types of GSI plans. And you guys might have heard this terminology. An endorsed plan, where an agent, an insurance company, and GME get together and they come up with an offering, and GME, or the benefits department, is going to make the residents and fellows aware of this, and they're going to promote it. Most of them are not that. Most of them are non-endorsed plans, where the agent does a significant amount of business at that institution and says to the insurance company, I have done a significant amount of business at this hospital. Will you give me a GSI offer for the residents and fellows at XYZ institution? And once they give that to me, it's my job to promote and make the residents and fellows aware of it. But if I don't do that, and it's a non-endorsed program, it's very legitimate that the institution might not know that it exists at all unless I tell them. Or I had a client that took advantage of it and went to GME and said, thanks so much for making this available, not knowing that they don't even know it exists.
That was one of the reasons too, kind of going back to my initial notes on like not knowing what you don't know. How many times we told physicians to go ask their HR, their GME, like, do you have a GSI policy? They come back and be like, we have no idea. And then I would jokingly like send you a note thinking like, they must just not have one. You're like, oh, no, they don't. Fred Smith is the agent. Here's his contact information. And again, that's really scary stuff because we just talked about, and we should come back probably right after this note and like go over high level, like this is what a GSI is. Mm-hmm. But the amount of people that are missing out on possibly this once in a lifetime opportunity or this foundational piece of their financial plan going forward it's scary. It really is.
Oh, you basically, you almost have one shot at the title. And if you miss it, you miss it. I mean, so there's a couple of wives' tales or myths. So we see this with discounts. Emails go to the residents, typically the end of the academic year, and it says, you need to apply. You're going to miss out on this discount. And they lead you to believe that the discount ends as soon as you graduate. And that's not true. Most discounts are available on a fully underwritten policy anywhere from 3 to 6 months after graduation, even if you no longer have anything to do with that institution, even if you're no longer in the same state in which you did your training. GSI plans also have what's called an endorsed agent or agents. And these are groups of people or individuals that basically control the guaranteed standard issue plan. And you have to go through them to buy it. So the problem becomes, Tyler, like if I'm the endorsed agent for ABC and you're an insurance agent that does not have the endorsement, and even if I wanted to, I couldn't let you use my GSI plan without making you a selling representative. And unless you're really going to legitimately do business there, I'm not going to do that because I'm the one that's going to have to answer for your lack of productivity. So now the problem becomes is if you don't know what you don't know and you put someone into medical underwriting because you knew you couldn't share with me, or even if you could, you said, if I share with him, I'm going to have to cut him in, which means I'm going to get less. I'm going to take my chances and I'm going to roll the dice with this doctor's insurability. That becomes a real problem. So I had a call the other day, highly successful surgical specialist, and he was doing a fellowship. And he said, I found your information. I was referred to you. Can you take a look at what I was offered? And he was offered a 2-year payout with a 100% rating, so 2 times the normal price, with no increase options. And this guy's not even done with his training. And he said, what do you think of this? And I said, honestly, not much. And he said, well, the agent I spoke to showed me multiple companies and told me that this was the best one for my needs. And I played a little bit of Columbo, not that you guys are old enough to remember, but this wacky detective that kind of came across as not knowing too much. And I said, can you tell me where you trained again? I don't think you told me that. And he did.
Wait, did you precede that by saying, well, now, wait a minute. I just got one more question.
Yes, that was the one after that. So I said, can you tell me again where you trained? I'm not sure that you told me the first time. And he told me, and I said, what I'm trying to understand is why there was a perfectly good guaranteed standard issue plan available to you that this particular agent, knowing or unknowing, chose to not make it available. And I said, what was your medical specialty again? And he told me. And I said, I would imagine your income earning potential is substantial. At least I think that's the case. And he said, Larry, are you for real? And I said, I know it's high. I'm just kidding around with you. I'm like, the reason that he chose to not tell you about this is he wants to do a lot of other financial services for you. And the correct thing to do would have to be giving you away to that person that had the GSI plan. And ultimately, maybe they would take it back and they would become your servicing agent and going forward work with you. But I think that they didn't want to take the chance of giving you away and not getting you back. And he said, that makes a lot of sense to that agent. And I said, I'm not there. I don't know what makes a lot of sense or doesn't make a lot of sense to that agent. But if that agent is working that hospital or that program routinely, I would strongly suspect that they know what is available. And they also understand the risk of giving up a GSI plan with no potential to go back. It is unfortunate, but it's important that you do your homework and you do your due diligence, especially when it comes to these GSI plans.
Here's a question that I have about the GSI agents.
Mhm.
I've gotten feedback from not like the quality of the agents themselves, like in their work, but I have some people who are, chief resident, or like there's someone that's like a senior of some level that has approached me about doing a financial education session. They went out of their way to tell me, I don't like the disability agent because he just sits down there in the cafeteria and is just kind of like, hey, like, I'm your guy. And they have like a negative view of this person. That actually might be hurting the residents because maybe that's exactly what they need. And maybe this person is the conduit to get it. I guess my question is, are there any things that trainees should be watchful for with regard to the GSI agent themselves? I think that GSI is very important to consider. But as far as like, are there red flags that they should watch out for because that person is like, it's like they're the only shop in town?
Yeah. I mean, I would say you approach it no differently than you'd approach anything else, right? Do your due diligence, see how long they've been in the industry, see what products they tend to recommend the most, see what company or companies they tend to recommend the most. And unfortunately, in some cases, even if that's not the agent that they would pick by choice, it might be the only agent that they can pick to get that GSI plan. So what do? You buy the GSI plan because that's what you want. You don't go into the supermarket to go buy other products that you don't necessarily know you're looking for. You buy the GSI plan. You either develop a relationship with this agent if you like them. If you're like, look, there's no chance I like this agent, I don't get along with them at all, they're just a means to an end, buy the GSI plan. They will be compensated for being the endorsed agent, and then sign that policy to another agent that you like, that you can work with on a going forward basis. Now, they won't be compensated for the original sale. They will only be compensated if they exercise your increase option and they help you buy more coverage. But in some cases, you can be penalized for not going through that particular agent. That's just the way that it is. The same thing is true in certain hospitals, even to get a discount on a fully underwritten policy. So there are exclusive deals out there, whether it's a GSI plan or whether it's a discount in and of itself. And ideally, I would like to think, if you're talking to multiple agents, they're going to come back and say, I'm showing you the discount so you know that it exists. But should you choose this particular insurance company's product, or should you choose the GSI offering, you need to buy this from that particular agent. And once you do that, if you want to work with me, come back with me and I'll help you going forward. But if that's what you want, it really doesn't make a lot of sense for you not to take advantage of either the GSI plan or the discount just because you want to work with me or another agent right out the gate. We've been around long enough that we're okay with, look, I love you as an agent. I'd rather work with you going in, but you don't have access to that. And we understand it. That's just part of the way the gauntlet is set up. So you really have to look at it just like that. And I agree, Tyler, 100%. It could be this person's lack of knowledge or presentation skills. They come off in a bad way. They could be like, look, I got the keys to the castle. I control it. If you want in, you got to come through me. End of story. I can't vouch for personalities, but I will vouch for if the GSI plan is there and it will be helpful to one or more residents at some point in time, and that person is the only game in town, you got to go that route, like it or not. It's like cutting your nose off to spite your face. Like, just doesn't make sense.
Larry, why doesn't every program offer GSI?
Remember, it kind of goes back to the endorsed and the non-endorsed programs. So generally, the number of endorsed programs is going to be far fewer than those that are endorsed. There's a lot more hospitals than there are disability insurance agents that really do know what they're doing. If a program is very small, even if someone like me went to an insurance company and said, we'd like a GSI plan for this group, if the group is too small, the insurance company is just not going to have an appetite for it. If it's too big, unless there's a large number of insurance agents collaborating, the insurance company is not going to get the numbers or the participation that they're looking for. So again, they're not going to make an offer available. The only reason that GSI works, regardless of insurance company, is participation, because the insurance companies are actuarially driven. They know they're going to get some risks that are not so great. They know, in fact, they're going to get some declines. But if they're getting enough of the healthy people and the participation is there and the numbers vary, they start off low and then they get to be larger over time as the program becomes, more well-known, the insurance companies are going to be okay. And they're willing to shortcut the system, and they're not paying underwriters. It's literally just going to like a GSI processor or an administrative person. And it really is the definition of the law of large numbers. And a lot of people just don't understand that.
The one topic that Tyler and I brainstormed on, kind of like the main question, how do you walk someone through the get the GSI versus don't get the GSI question? What's kind of your list that you're walking through? I mean, like at a high level right now, you'd say like everyone's probably thinking like, I don't know, it sounds like a really good idea to get the GSI, but we know that that's not always the case. So kind of give us your thoughts, your tidbits on get it versus don't get it.
Okay. So general rule of thumb is it's the same individual disability insurance policy that you'd buy fully underwritten. But there are some predetermined parameters. So generally, the maximum monthly benefit between the base and the increase option is going to be $10,000 or $15,000. For a lot of medical specialties, that might not be enough. Just to give you an idea, to get to $15,000 a month with no other coverage, your annual income needs to be somewhere between $350,000 and $360,000. For a large number of medical specialties, that's not going to be an issue at all. All of the GSI plans have a limitation for claims resulting from mental or nervous conditions, anxiety, depression, stress, chemical dependency, drug addiction, burnout. If I don't want that and I prefer a burnout claim to be handled the same as a cancer claim with no limitations, then I really can't buy the GSI plan. If I want a certain type of increase option, like a future increase option or a future insurability option, the traditional one like I grew up on, where you're paying for the right to be able to buy more coverage, it comes up every year. If you want to buy more, that's great. If you don't want to buy more, that's okay too. If I like that type of increase option and the insurance company at my institution does not offer that, I'm probably not going to opt for the GSI plan, right? So a lot of it really comes down to that. This is going away, but you guys are familiar with this, gender neutral or unisex rates. Like this has been going on for years. And I can tell you, one of the large guaranteed standard issue companies is switching from gender neutral or unisex to gender distinct in the not too distant future for all but 3 programs or 3 institutions. So if I was a female, from a rate standpoint, forgetting everything else, I'd probably be looking for a unisex rate. A male, on the other hand, is looking for gender distinct rates because those rates are going to be lower for men. So, you've got these 3 institutions left that are going to be, from a rate standpoint, they're going to look great for females. Then you've got another well-known GSI company that for the most part has switched over to gender distinct, but there's certain states that still have unisex rates on their GSI plans with this company. So that's like New York, where I am, California, South Carolina, North Dakota, South Dakota, Wyoming. So sometimes it even becomes state specific, right? So there's almost no 100% got to get the GSI versus not going the GSI route. When in doubt, I say get the GSI plan. It really cannot hurt you to get that plan. It can hurt you if you try to go elsewhere and things don't work out. Now, these rules can change, but I'll give you a few generalities. So remember, general rule, if you're declined on a fully underwritten basis, GSI for the most part is off the table. Current date, and this could change. If it's a Guardian GSI plan and you only apply to Guardian, they will always take their own modifications. So exclusion riders, ratings, they will always take their own declines. If you go to Guardian, you can always go back to Guardian and get that GSI plan. Second one is kind of a Guardian unique rule. I call this the Vegas rule. And you guys look like a wheeler dealer, especially Chad in that shirt. I could see you behind like the pit boss, right? So what they say here is what happens in Vegas stays in Vegas. So let's say I was a medical student at XYZ University. I matched into residency. I knew I was going to a different institution. I try to lock up my disability insurance somewhere between graduating medical school and starting my residency. If I try and I get a modification or I'm declined, and I did that prior to my hire date at the institution in which I'm doing residency, Guardian says what happens in Vegas stays in Vegas. If you were in XYZ medical school and now you're in ABC residency program, we ignore that. Even if you went to another insurance company and were declined or modified, that does not count. And then Guardian's got a really funky rule. We call this the 9-month rule. So you came in, Tyler, you were listening to some great financial planner that said you needed to protect your income. This is the time of your career you're going to have the least amount of money, but the greatest amount of potential. You immediately find an insurance agent. You apply for insurance after your hire date. 3 months into your application, you are declined by that particular company or modified. Because the knowing of the modification or decline took place within the first 9 months of your hire date, you are still eligible for a Guardian GSI, not only when you're at that institution for, let's say, residency, or if you stay fellowship, but currently for up to 90 days after graduation. So you did this in intern year, you got a really bad taste in your mouth. It's like putting your hand on the oven. You got burnt. You pull it away as quickly as possible. You're like, I'm not doing this again. And now you're a 4th-year resident and you run into someone that says, because that took place in the first 9 months, you're actually still eligible for the Guardian GSI. Not only now, but for up to 90 days after you finish, let's say, residency, or if you stay fellowship. This is suddenly like all of the dark clouds have gone away and you're like, this is great. And I remember I said to, one of the guys at the home office and Guardian, what's the actuarial statistic significance of this? And he laughed and he said, Larry, there is none. We're just giving you time to do your job. And we're giving those residents and fellows that were unaware that a GSI plan even existed the time to learn about it. So it's great. Now, there's one caveat for most of this. This is a relatively new rule, and one of the companies started it, and now another one is following closely. So agents used to be really smart, and they would say, don't try for the GSI plan. Let's try for fully underwritten. And then if we see the Titanic is going to sink, I'll pull your application. So now you were not officially declined and you were not officially modified, but we knew it was coming. 2 out of the 3 well-known companies that have GSI plans, if you pull a pending application, you are now no longer eligible for the GSI plan. So now more than ever, you really have to be extremely cautious, not only as a physician, but I submit to you as an agent, you really better go out of your way to know, is there a GSI plan there? This you wouldn't know. What's in this person's medical records? What does their prescription history look like? Which takes me back to, if there's a GSI plan there, that's probably what you should be buying. That's why the insurance companies put it there. They're looking for the numbers. They're willing to go out on a limb to offer coverage for those that either shouldn't get it or would normally get it with a modification. And if you don't go that route, it's almost a disservice to you as a physician and to your colleagues trying to avoid the system is really what it comes down to.
So that 9-month rule, you're saying that if, an intern applies for a fully underwritten policy and they get denied, but their program has a GSI that's offered by Guardian at the moment and perhaps one other company in the near future, they could later on in PGY4, they could still be eligible for the GSI. However, if they went through the same process and instead of getting denied, their agent was getting fancy and pulled the application before it got denied, then they can't get the GSI.
They're still okay because of the 9-month rule, whether it's a decline, a modification, or withdrawing a pending application. But the 9-month rule could change. We don't know. GSI is an ever-changing set of rules. And I could see why you guys are confused, because it's like just when you thought you had it all figured out, something changes, right? So I think a lot of agents, struggle with the whole GSI, non-GSI. And I'll tell you, the ones that struggle with it more are the ones that don't have access or don't know where the GSIs are, because they just don't know what they don't know. Now, I'm not going to tell you that there's some agents that choose not to know. At least that's my personal belief. And they're like, well, if I don't know, I can't hurt anybody. I don't know. I leave that up to the audience.
What you're sharing is confirming a strong opinion, and that is that you really need to be careful about who you decide to trust with this decision. You probably see it that much more clearly on your side of things, but the physicians that I talk to about this process, they are overwhelmed with the number of emails and LinkedIn messages and contacts otherwise from agents. And it's relative to other financial services, it's a decently high profit margin business without having to be that qualified to be in a position to say, hey, I'm a disability insurance agent and I help physicians. And I see this pattern more and more.
And here's an interesting thing too, right? So the more experienced you are in theory as a financial advisor, the more you can charge your clients because they're paying for your experience. What's even more crazy on my end is we all have the same license. We might use it differently, but let's just assume for the moment we all had access to the same discounts. There were no exclusive programs. We all had access to the same guaranteed standard issue plans. There were no exclusive programs. And you weren't going to pay anything more for working with an experienced agent versus working with an inexperienced agent. Why would you choose the inexperienced agent? And we've all been there. I mean, I tell people when you come into the industry, the medical marketplace, that's where you're generally going to find people that are really very good at what they're doing. That's why they're there. There's a lot of competition in the medical marketplace. So unless you're kind of anchored to someone or you have a mentor, you're kind of like walking in to like a major battleground where there's a lot of other industries that are out there that for the most part are untapped. So you don't have to be an expert even as an agent, but I believe if you're affiliated with or if you're in a network of agents that have a very good understanding of what's going on, not only GSI, but, discounts and the like a big think tank, it's really better for everyone. If you think about it, medicine has the Hippocratic Oath, right? I won't throw out a number, but let's just say the overwhelming majority of physicians are really working to give their patients the best result that can be provided. Unfortunately, the physicians believe that the same bar holds true in every other profession, and it just does not. And that leaves a lot of room for potential error.
Yeah. How would you then, if someone were to, just to try to figure out, how do I find someone who I can trust? I mean, the natural answer, even though I know it's full of bias, is you go well, give me a call, right? And we do recommend you because we know that you have a lot of expertise and experience. But from a protocol or process standpoint, what would you suggest a physician do to find someone that they can trust?
I would ask your co-residents and fellows that are ahead of you. I would ask residents and fellows that are kind of in your year if they've done disability insurance, and if they did, what company did they go with? What was the name of their agent, or what was the name of the agency? And if you hear the same names over and over again, that's a good sign. Then I would probably go online and I would look to just do some research. Is this person easy to find? Is there content that they're putting out there to help educate physicians? What is it that they're saying? How are they handling themselves? Because I'll tell you, just, a name of an agent, a name of an insurance company, in and of itself really isn't going to do it. And although I hate to say, go out and get quotes from multiple agents, I would say talk to 2 or 3 agents, even if you don't get quotes for them. And I probably start off with, is there anything that you know of or have access to that someone that I'm going to call after you does not? Why should I pick you? And in your mind, if I was a young resident physician or fellow or even a young attending, why should I choose you? And it's just an interview process at that point. Maybe I would say, do you work with the specific types of medical specialties? Are you limited to geographical area? How do you make your money? Is it selling disability insurance? Is it selling financial planning services? Is it managing money? And these days, there's so many great resources and podcasts, like one I know of, that's out there. The information is out there for the taking. And I remember years and years ago, I was talking to an older physician about his estate planning. And I said, hey, do you want to talk about estate planning? We can accomplish this, this, and this for yourself and your family. And he said, son, I'm going to teach you something. And I'm like, wow, this is great. This high income earning, really successful physician is going to bestow this great knowledge on me. And what did he say? If I have an interest, I make the time. If I have no interest, I have no time. So I would say this is a big enough project. This is a big enough purchase to make the time. All in, it should not take someone more than an hour to an hour and a half of taking in the terminology of, what is non-cancelable and guaranteed renewable? What is own occupation? How does that differ from one company versus another, if it even differs? And then go into okay, why should I choose you over somebody else? Because it's going to be a handful of companies that everyone is going to come back with, at least for physicians, at least for own occupation coverage. There's going to be discounts. If it's not all the companies, it's going to be at least one of the companies. And then it's going to be the GSI plan. But I would start with, is there a GSI plan available to me? Because that in and itself might be your choice. We talked about that agent, even if they're not well liked, even if they're the person that I don't want them in my department. If they have the answer, that's what you have to buy. And once you have it, then you can go find an agent that you really want to work with and have them service that policy. But at least you've locked it in and you've protected your most valuable asset. Because at the end of the day, I'd like to think we're all really nice guys. I'd like to think we're all very knowledgeable. I'd like to think that physicians are all brilliant and they're out there helping their patients day in and day out. And we all are those things. But in a really simple way, we are nothing more than highly educated, money-making machines that are using our education, training, and experience to better other people's lives and to build a lifestyle for ourselves and our families and pay down debt. And if it all ended and we could not work because we were too sick or hurt, that's the problem that disability insurance may effectively solve. Not for everyone, because there's going to be some people where they just don't need it. Their net worth is too high. They have family money. Maybe they're a resident, but they're also owner of a family business, or they have a trust or something like that. But for the most part, if someone is working and they're working for the money, they need the income because that's what drives their financial plan. And if they're too sick or hurt to work, even the best laid financial plan comes to a screeching halt, or may come to a screeching halt.
I don't think you could have ended on a higher note than that. I think from the financial planning side for Tyler and I, it's probably why we always come out and say, there's probably a lot of times I say it's probably your most important decision you have to make early on at all points, but ideally you do this sooner than later. We can talk till we're blue in the face about backdoor Roths and maxing out your 403B and, make sure you get your estate documents done, all extremely vital. But if you had to put in like one piece of that puzzle early on in financial planning, especially, in the group we're talking about, resident fellow, early attending, I mean, it's guaranteed top three. I think in a lot of situations, it's probably number one. Again, as the financial planner, I think everyone thinks financial planning, they talk about investments, and it's exact opposite, right? This is one that protects your income, all those years of training, all your future income. And that's what we'll say, when they're like, it's expensive. I know it's expensive. We know it. We get our quotes from Larry and we break them the bad news, but we're also like, think about it though. Think about your income now, next year, 10 years, 20 years, 30 years, 40 years. Right? It's insuring a big thing. It's not a small number that it's insuring, but man, I wanted to go deep on GSI and I don't think we missed the mark here.
I actually think that this is a good place to pause. And I say pause because I think that we should continue this conversation on another podcast episode sometime with you, Larry, because I really appreciate the your perspective on this. But I also know that it's a lot to absorb for our listeners. And so I think this is like a good meal of knowledge that they could all kind of chew on for a bit. Those of you who are in medical training or out of it, I've said this many times that everything can be perfectly fine, financially speaking. It can feel really stressful when you're in medical school and when you're in training and you can't do anything about your student debt if you've got it. You're not making very much per hour. Of course, that's not what you're there for. You're there for your learning and training. But like long term, it should be encouraging to see that the income that's coming, or that maybe you're experiencing now, it can be an anchor for a really strong plan. And so, yes, there is reason for optimism. This risk must be covered. This is not optional. And I live it myself. I have coverage. I'm not a doctor, but I have a specific skill set. So I have my own occupation policy, and I tell people that. I really hope that all of you who are listening or watching today will do something about this. And you don't have to do everything. One thing it's important to note too is don't let the perfect and ideal solution search be the enemy of good enough. Get something going. So this was very, very motivating and insightful, Larry.
Awesome.
Really appreciate it.
I told you it took long enough. I said I'm gonna bring my A game, and I'm gonna bring some nuggets of wisdom. And again, I'll echo what you said. You guys are awesome physicians. You don't have to be an awesome insurance agent for yourself. You just have to know what it is that you need to look out for as a starting place. And there's enough resources that are out there. There's enough podcasts that are out there. There are enough people that work with physicians on a daily basis that can get you through. I mean, I speak to a lot of my physicians and I say, if you can do medicine, you can do disability insurance. It's really not that bad. It's a phone call, podcast. You look at a couple of illustrations of coverage. There's a few things that you look for that might lead you in one direction versus another, but that's it. And then you just kind of move on, lay your foundation and get back to what you want to be doing, which is practicing medicine. Or when you're not practicing medicine, you want to be home with your family, or you want to do something that you consider fun. This is just part of responsibility and really fuels the financial plan is what your income actually does.
Thank you so much for taking some time with us, Larry. And I'm glad we could have this conversation together.
No, thank you guys for having me. I appreciate everything that you guys do in terms of education for physicians. Like, I don't know, you guys say it probably best. The educated physician that's well financially, they make better doctors. They spend more time with their patients. They have career longevity. It's all about them and not so much about us. So I really appreciate it. Have an awesome day, guys, and we'll see you again soon.
Thanks a lot. See ya.
This information is for general purposes only. This information is not intended to be a substitute for specific professional, financial, or tax advice, as individual concerns vary. Please see a financial professional, CPA, and/or an attorney in regards to your own individual situation. Wealth Deals advisory services and financial planning offered through Vicus Capital Inc., a federally registered investment advisor. Olson Consulting LLC, offering advisory services and financial planning, is a state registered investment advisor.